Hey, good day, traders. Dennis Wilburn, the Autopilot Trader. I've got my Texas Longhorn hat on, as you can see, in honor of the bulls coming back into the market. The question I have, though, is are you buying this bull? Let's get into today's session. Watch it all the way to the end. I've got 2 stocks I'll be reviewing at the end. There's the bell. The market's over. So let's get into today's session right now. Okay, starting with the spiders as a representative of the S&P. Check out what's going on. We have now broken back above the 8 and the 20 and are pushing our way up towards the 34-day moving average on the daily chart. TSI is crossing. This is an important feature here. TSI is crossing the 0 line, which is oftentimes a prerequisite for going into a longer-term uptrend. We are running up, but basically we broke through one downtrend, but we're approaching a secondary downtrend, which corresponds with the 50-day moving average. We need to take out that swing high right there to have a higher high to go with the higher low that we currently have in place. And where could that potentially happen? The market's not out of the woods yet. So, the old adage of, the bears are still out there lurking. But let's take a look at where things could project out to. To do that, utilize the Fibonacci extension pattern. And oftentimes we will get a symmetric pattern where it will move up about the same amount it's done in the past. It's just reflects the personality of the entity and also the people that are trading it. So let's do a real quick measurement here from low to high, back to this most recent high. And where is the 100% symmetric move? Would be up here about the 403 level, 403.54 to be exact. Well, the good news about that is it would take us out and through this downtrend line here that's been in place almost all year long. At the same time, though, the 78% extension right here, prices could stall out right there, and that happens to be right at the 50-day moving average and the downtrend line. So that's what's going on with the S&P. What about the NASDAQ as represented by the Qs? Again, similar type of situation. Actually, a more powerful move. TSI is breaking above the 0 line. Market forecast is also turning up. Price actions have just about reached that level of past resistance formed by that swing high there. If I was looking to trade the Qs or TQQ in this particular case, I would look for either a pullback into the midsection of today's candlestick or down towards the 8 and the 20-day moving average, which are going to be at approximately where tomorrow? About the 289.84. And how do I come up with that estimate? Is you just basically do the math and draw some lines on your moving averages, as you can see right there, and just extend it upward a little bit and on the trajectory, and it puts it up about, I'm eyeballing it. If you want to draw it in there to be more precise, that's fine. About 288 to 289, or even down into the lower section of today's candlestick. So anywhere from the midsection of today's candlestick down to the lower portion may set yourself up for a new trading opportunity. The other thing that is of interest here is we have broken above the downtrend line, positive for the bulls in this case, positive for the bulls, breaking above that line. So we could add some profits going. Doing the same type of thing with the Fibonacci's. Just lay out a line here to here, back to this low. And that gives us a 100% move up to about the 303 level. Traject out, price actions are probably going to go to 303, or the next level up which is the 1272 extension at the 310 level. I love using these Fibonacci's, especially when I'm trading options. They work out very well. The Russell, IWM, as represented by IWM, also breaking above the 8, breaking above the 20. It also needs to take out its last swing high, which is up here at 178.15. And at this particular time, that's going to put it almost directly into conflict with the 50-day moving average, which is at 179.46. You can do the same trajectory. The trajectory on the Fibonacci's, trust me, takes you actually right up into, you can't make this stuff up, it takes it right up into the downtrend line. Pow, pow, back down to here. As you can see, right there is the 100%, right on the downtrend line. And what can happen in situations like that is, one, yes, we would be in a new short-term uptrend. However, if it fails there, it starts showing stalling techniques by little small body candles, spinning tops, shooting stars, that type of thing, we can expect a pullback. But a pullback in this case to where? I would look, because the 8 and the 20-day moving average are shifting back up, along with the slope on the 50-day and the 34 are also shifting up. Look for a pullback into the probably 820, maybe 34, if we do get up into that area there. And that's where we would expect in a bounce. One other thing to remember as we look at past history, when a market or when an index is down 20+% or more during the first half of the year, historically, traditionally, the last half of the year, the indices is up, and primarily in the S&P. How much is it up? Typically about 20 to 24%. And so in the case of the S&P, we'd be basically just gaining back to the high for the year. But remember, that's 20% to the upside. And if you've been following the AutoPilot Trading Service, you have basically been measuring your entries and exits and protecting your capital, taking your profits, and we're up and significantly beating the S&P already this year. So we'll continue on with that theme going through the rest of the year. Two stocks I want to cover for you really quickly. This is a potential pre-earnings run, but also some stocks that past leaders that could be coming out of the doldrums and starting to rocket ship up. And one of those is Tesla, one of everybody's favorite. Let's be aware, Tesla has earnings coming up when? Here on 7/20. That's only a couple of weeks away. I would look at basically if we get a pullback into the midsection of today's candlestick. There we go, midsection of today's candlestick. I would look at doing some kind of a spread trade that would expire prior to earnings. So it'd only have about a week and a half to go. And this, Tesla moves, like today's range was about $39, almost $40. And so if you're doing a $5 wide spread, a day's worth of work can take you through that spread to the upside. So again, I would look to target shoot some at or slightly out of the money spread where the anticipated price action for the next day would take me up and through that spread. So that's number one. Number two is Amazon. Amazon just closed the deal with Grubhub or something like that. Kind of an interesting situation. But Amazon, after the stock split, went through the post-split depression, but is really hammering out a bottom here that could, in fact, take out the high from the 27th, which corresponds almost to the 50-day moving average, and we could be off to the races, well, when I say off the races, for about a $10, $15 move. Earnings also coming up on that one, 7/28 after the market closes. So that's what we're looking at going into this week. Remember, if you're joining us here on the YouTube channel for the first time, please subscribe, hit that like button, help drive the algorithm. Leave a comment if you want me to look at particular stocks going forward. I do this particular market review typically twice a week, unless it's a holiday week like this. But on Tuesday and Thursday, remember, join us for the free live session. That's a live stream session called Trade Your Way to Wealth and Financial Freedom every Friday at 11 a.m. Pacific time over on the YouTube channel, Market Tech Talk, or better yet, just become an active trend trader, and I'll send you an invite so you can actually see it on a Zoom meeting. So aloha, God bless everybody. We'll see if the bulls are back.